Hello, everyone, and welcome to the first ever episode of FinOptiPod, the financially optimal podcast. I am your host, AJ Valenti, if you didn't already know, and today we will be discussing investing. We're going to, talk about different parts of it, specifically, should you invest for the beginners out there who are wondering, when is the right time to invest? Why should I invest in the first place? We're also going to be talking about some of the more advanced strategies to optimize your finances and even do things like save taxes in the process of investing. So I've got my microphone here. It's a kind of a different setup than the normal YouTube setup. I've got my phone over here. I'm going to be having a timer just to see, with the content I have, get to know what sort of time I'll be making. Here we go. So we'll get to the more intermediate and advanced people in a second, but for those who want to understand and are coming here like looking to find out if they should be investing at this point and wondering why it's important, growing your money in a passive way. And so in some instances, if you're a stock picker, it's a bit more active, but if you just run the index fund gauntlet, then that's something that's very passive, and it's going to obviously give you more opportunities financially. So, for example, like if you want to retire one day, if you want to make a greater emergency fund, you want to create a buffer between having to work and wanting to do other things and whatever goals you may have, whether it is financially, like saving to buy a house or saving to buy a car, or something personally, like you want to go visit countries around the world. Like the idea of having your money work for you is going to allow you to do things like that. And so we'll probably be touching on real estate many more times in the future, but this video is more focused on the stock market itself. And that is a more easy way to especially getting started in investing, because it doesn't take a whole process of inspections and verification of all this information and seeing a property and making sure you like the location and all that. It's literally, okay, either I like a company or I like this index, and I'm going to literally sit on my butt and, go to my stock market account and click buy the stock. It's a lot more simple than something like investing in real estate. I talk a lot about financial freedom on my YouTube channel, and to me at least, the idea is that you can do what you want. You are not tied down to whatever your income source is, whether it be a job, your business, something like that. You just have more freedom to do what you want. Whether it's an emergency, which we can talk about, you should probably start by saving up for an emergency fund before you start investing. But on the other hand, even if it's not an emergency, let's say you already have an emergency fund, but you want to take a month off of work to go to Europe or Asia, or just do something, whatever it may be. It's just going to give you that opportunity. As your money grows and compounds on itself, then you're just going to be getting more of that opportunity. If you want to look at the numbers for a second, you don't really have to be good at math to understand. You just have to look at, okay, this number is bigger than that number, and so bada book, bada boom, one is obviously better than the other. And so the average annual returns in the US stock market is between 7 and 10%. And so that means over, let's say, 7 to 11 years, you will be able to actually double your money in the stock market without you actively having to, lift stuff up or whatever you do for work, type on your computer, whatever it is. If you are doubling your money that frequently, if you start early enough, obviously that's a huge advantage for you, because you're going to be able to double that, 2, 3, 4 times, depending on how early you start before you even hit normal retirement age. And on top of that, hopefully you are able to actually save up enough to keep investing and continually contribute to your portfolio. And that's just going to compound upon itself. And that's the kind of crazy thing about investing in any sort of fashion that is consistent, is that, you know, the difference between starting, 5 years later or 5 years earlier is actually a lot of money. And even the percentage rates that you get, I mean, you can look at some of the compound interest calculators online and just see the differences. But either way, if you're investing and you're doing it in a relatively smart way, which there's definitely plenty of ways where you can just go index fund, which is essentially a culmination of a large group of companies. So like the S&P 500 is a group of 500 stocks, some of the largest stocks in the entire, stock market. And so you just buy a singular stock that is basically a little piece of all those 500 companies. Then you get immediate exposure to a bunch of different sectors. Those funds are the funds that are getting that 7 to 10% annually. And so you don't even have to worry really, unless, you don't even have to really check it unless you're putting more money in. When you look at the majority of people, the majority of people are not, like, for example, me, like literally doing a financial podcast, running a financial YouTube channel, running a financial coaching business. Like the normal people are not me. I'm not, the normal person when it comes to finance. So for the average person, like, if you're not really interested, then you don't have to spend like hours and hours on end researching stocks like you would if you were stock picking. You can simply, put your money into maybe a couple different funds. For example, VOO is one by Vanguard. SPY follows the S&P 500. Those are the ticker symbols if you want to look them up. And you could actually look at, what are the companies in those and how are they weighted. So like maybe it's, for example, 12% Apple, like 9% Nike or something like that. But essentially what I'm getting at is that investing is helpful, important, and good for your financial health in terms that your money can work for you. It can grow over time and help you build wealth and reach financial freedom. And also it's not super difficult. It's even as simple as literally signing up for an account and buying one stock, having that process where, try to save more money to invest on top of that emergency fund. And it just creates a large buffer. And eventually, hopefully, you can reach that financial freedom that really just lets you do whatever. Now, I'm kind of hinting at the other side of things where you can do a lot of research in stocks, and that's the more advanced side of things. If you're a stock picker, which I guess I'm a stock picker because I pick individual companies, and the goal there is to actually make more than the average returns. So for example, instead of making 7 to 10%, maybe you're shooting for between 12 and 20% annually, because that would only make it worth it. Like if you're going to be stock picking and you're just making the average returns, well, you might as well have just invested in an index fund, because you're going to be making the same amount of money for a lot less time. Now, some people also find it very fun to pick different stocks, and yeah, that's part of it. I mean, I like just comparing companies and seeing which ones I want to invest in. So like that's fun for me, but it doesn't have to be like that for everyone. Like literally put your money in a fund or index fund and say peace out, friends. So that's sort of the introductory information on why you would invest and what are the benefits for it. At the end, we're going to be talking about some of the things that I'm personally doing to capitalize on the current stages of the market, and also how I'm optimizing it in a way to save on taxes. But first, I just want to talk a little bit about the podcast. This is the first episode. We kind of did an intro. We gave some information. But I just want to talk about what exactly I see for this. So hopefully some of you are listening on either Spotify, Apple Podcasts, or Google Podcasts. If the podcast is approved at the time I release it, also on YouTube. If you're watching the video version, hello. I actually really wanted to start off by doing like a radio voice and like going really close to the microphone, but I mean, it just, I tested it and the audio is so scuffed. Can't do that. I can't make that a meme or anything. But yeah, I'm hoping to try and maybe do this bi-weekly, maybe 40 minutes per podcast. Maybe that's a good amount of time. Also, in the future, I would love to have questions from the viewers. So if you do ever just like literally have anything that you want me to answer on the podcast, then I would say the best bet is to go to the YouTube channel and just go to the comments and type in your question there, or just any sort of comments, and just let me know if you want it to be anonymous and you don't want me to say like who asked the question. If that's the case, then maybe you could DM me on Instagram. I did ask for questions on my Instagram story. I didn't get any, so we won't have any viewer questions for this podcast, but that's all right. Let me know. Also comment or message me in some way. Where are you listening? If you're not listening on YouTube and you're not watching it, are you listening to it on Apple Podcasts, Google Podcasts, Spotify, or even something else? Like, let me know. I'd love to hear it. I'm not sure really about stuff you can do on there. I don't know if you can comment or whatnot. So maybe leave a rating or something like that. I think that's a thing. I know on Google Podcasts, you can subscribe or follow maybe. I'm not sure. So if you want to, have me pop up in your feed when new episodes come out, that's always appreciated. And also, if you do enjoy, be sure to hit the thumbs up on YouTube, subscribe to see more content, because also on this channel, we do, long form YouTube videos. Sometimes we do short YouTube videos. And, I just have some ideas of ways we can kind of make finance not necessarily simple, but easier to understand, and just get the knowledge out there, and also maybe try and crack some jokes and make it fun in some way. So if you're into that, that's definitely something you can do. Of course, follow me on Instagram. I may ask for questions over there when I know like what the next episode is going to be about. Maybe I'll ask more targeted questions over there on Instagram. But otherwise, like, the name FinOptiPod is a play on words of FinOptimization with FinOptimization.com. That's my business website. But also financial optimization is obviously the YouTube channel. And then also you got the word FinOptimal, FinOptiPod, phenomenal. You hear that? You hear that? That's a play on words between financially optimal and also phenomenal. So, hey, we got a little wordplay going on. Put that on a t-shirt. Sheesh. Anyways, thank you so much for getting this far and listening to the podcast. And let's continue on to the little processes that I went through recently, and what am I doing in the stock market right now. So I did release a short video just before this, earlier this week, on how I lost a lot of money in the stock market over the past few months. And so I also mentioned, okay, it's also possibly a good time to buy. Now, really any time, for the most part, is a good time to buy, because it's really hard to time the market. Now, there's going to always be ups and downs in the market. That's a given. That's something that, if you are not familiar with the stock market, that's something that you need to prepare yourself mentally. Because let's say you check your portfolio and it's down, and you're like, oh, I lost money. Like, oh, what is this? What is happening? That's something that will happen. And some years, most years are not down years. Rarely there are down years, but most of the time you're going to get the average of 7 to 10% return. At least that's what the S&P 500 has returned over like the past what, 40, 50 years? What is it? I don't know, something like that. Especially for stock pickers, sometimes the market just goes down, and there's so many different companies that are just hit super hard. And it's not necessarily because they're a bad stock or because the company did anything wrong. It's more so that there's just fear in the stock market, and fear usually just loses. That's how the stock market works. If you can, tough it out and get through the bottoms and the lows of the lows in the stock market, and actually, pick up a bunch of stock at those low prices, then you're really the success story of the stock market. You're the one taking advantage of inefficiencies in the market. Because theoretically, like, everything should be priced exactly in the right way, but sometimes there's just panic or fear or whatever it may be that causes the stock market to just go down. And that's what I'm trying to do right now. At least I'm trying to take advantage of some of the low prices, because for example, one of the stocks I'm looking into buying more of is Fubo TV. And so that's a stock I actually bought a long time ago, when it was like 4 times higher in price or in valuation. And now I'm like, well, if I thought it was a good deal then what do you think now? And it's not like the company has changed. Now, if the company changes, okay, then you need to reconsider. But if the company really just doesn't change, if it's just negative outlook and you still believe in the company, then it's like you struck gold, basically. If you are an individual stock picker, if that's something you're into, let me know some of these stocks that you're researching or buying in right now, because I think there's probably a lot of good deals out there. I'm just not sure exactly. I honestly, let's be honest here, I don't put enough time into stock picking as I should, into researching stocks and keeping up with the companies. I should really do a lot more. I just don't at this point in time. And that's something I definitely can improve on, because ideally you want to be at least keeping up with what's going on with every stock that you own, every company that you are invested in. Which I try and do that, but I just don't do it enough, I think. But then also, when it comes to stock picking, the idea is basically to have a company that you like, a business model that you like, and then buy it at a good price. That's the whole idea, and at a price that you can see it actually taking off and growing in value at those higher returns and those higher rates. The most successful investors are going to do that over a long-term span. So they're looking 5-10 years ahead to see if they're invested in that company for the long term. And so let me just name off some of these stocks that I am looking into at the moment. So we got Alibaba, which I did have some before, and that's kind of like the Amazon of China. You can describe it that way. It got hit super hard, even harder than some of the other stocks, just because a lot of the Chinese stocks also got hit super hard. User Testing, which is a company that I actually use sometimes to fill out surveys and give feedback on apps and websites. So companies they put out tests for people, just like anybody who qualifies, to basically give their feedback on an app and how something works and something like that. So that's a company I bought a little bit, but I think it actually might be at a value that I'm not sure I want to buy more shares of at this point, because it did go up quite significantly in the past few weeks. So we're also looking at SoFi, which is a 100% online bank, and it's the main bank that I actually use. So obviously I'm in tune with what they're doing over there at SoFi. So I just want to make sure I get the valuation down on that company. But let me know what else. I mentioned also Fubo TV. What else? What else? I actually want to hear. I'm sure other people, other listeners would love to hear what you are looking at and what you find to be possibly a good company. I usually tend go for more growth companies. You can play your risk, like a much smaller company that hasn't proven a lot. Those are obviously going to be more risky. A larger company that still has a lot of growth potential, that's more safe. You have to value for yourself whatever risk tolerance and whatnot. So now all that is to say, there's a lot more that actually goes into investing, and unfortunately at the moment I do not have a course. Yes, I'm sorry. I'm so sorry. Maybe that could be a thing I do in the future. I just don't have a course at the moment for stock market investing, or any courses for that matter. So maybe that's something a project I can work on when I see fit. But that's all to say that I would be more than happy to teach you exactly how I invest in stocks on my website. I do financial coaching. And so if you want to visit the website, it'll obviously be in the description. Yeah, I do financial coaching. So if you want to work on whatever projects, whatever financial goals you have, that's always an option. But obviously that's not for everyone, because that's a paid service. So for the most part, I just like to go teach the fundamentals, because that's going to give you a basic understanding of a lot of different things in the stock market. Now, for example, the Warren Buffetts of the world, the Jeremys from Financial Education, if you know who that is, a YouTuber. Those people have really already proven that the strategies work of, just buying good companies at undervalued prices, and that's for the most part how you find success, and you hold for the long term. And even in my, coming up on 4 years in the stock market, I've overall done quite well, surprisingly enough. It always shocks me to see, if you actually tally my net worth, I have my net worth is higher than all the money I've ever made in my life. And it's how does that even make sense? Well, the reason is because a lot of the money that I put in the stock market grew like crazy over the past 4 years. And so many of the stocks I found success, and I've also improved. Some of them, when you first start, and I didn't really know what I was doing. So those are more lucky than skill based. But then there's ones that are no-brainers. Some of the stocks I've picked, and they've just had success, and they've had it quicker than necessarily you would expect, because for the most part, I'm looking at least 5 years ahead. And so a lot of times, I don't really care if the stock goes up in the first year, even the first 2 years. It's really that 5-year outlook that I'm looking at, maybe even for some stocks, 10-year outlook. For the most part, I'm just impartial to the performance. Obviously, yeah, it's going to look cool if your stock market portfolio goes up 20%, or it says, oh, you're up 40% or 100% or whatever. And it's going to look bad if it's red in the first 2 years or whatnot. But you just have to believe that you did the right thing. You did the fundamental. Now things can change. Let's put it out there. Things can change for sure. But if you did everything right and nothing changes, and you keep up with all the stocks, or if you're an index fund investor, you don't really have to keep up with anything there. Then you can be happy. You can go to sleep and really, not have nightmares about the stock market. If you know you did the right thing, you followed all the fundamental rules, and you invested for the long term, that's all you can really ask for. And you just have to be patient. So let's talk about, for a second, what did I do recently? And so I touched on it a little bit in one of my previous videos on 3 tax accounts, or 3 investing accounts to save on your taxes. And so I basically went over the Roth IRA, Traditional IRA, and also the HSA, which is the health savings account. But essentially, I've used one of those accounts. I've used the Roth IRA, and I contributed my $6,000, which is going to be the maximum for most people. And I started buying a little bit of stocks. So I mentioned Fubo TV. I mentioned a little bit of user testing, some Alibaba. That that's what I've done so far. I'm looking to add maybe some of the other positions that I already own, and also, again, looking for some new opportunities. When I have the time to research the stocks, I think that would, now's a better time than ever. Because if you haven't been keeping up with the market has, would you call it a crash? Yeah, I guess. I mean, it's gone down quite a bit in the past 3 months. I think it was from November to here we are in April, and it's still, I mean, even still, some stocks are kind of tanking. So when the market is beaten down, there's definitely more deals to have. Now, I do also want to harp on the IRA portion of it. So with the Roth IRA, which is what I went for this year, essentially all that money you put in there and all the earnings you make on the stock, as long as you are following all the rules of the qualifications, like that's completely tax-free when you take it out for retirement. And the Roth IRA has a little bit more flexibility than the traditional IRA, but the traditional IRA allows you to save taxes right now. So if I were to put $6,000 into the traditional, then I would be able to deduct that $6,000 from my income, basically, and so I would, in effect, be paying taxes on less of an income. So, like I mentioned in that video, I'm not going to say like which one's better. It's really personal preference and what you think is going to be best for you. But I do want to point out that, like, if you are someone who either is already actively investing or wants to get started, think about this. Maybe you can't do it now because the tax season is about to pass next week, I'm pretty sure, on April 15th, whenever that is. Then for the next year, when you can qualify to put those contributions away, maybe just think about it. Do it in a way that saves you taxes. I mean, it's not going to hurt, right? Maybe it locks your money up a little bit more. But for the most part, the money you are investing for the long term, like, should be money that you don't necessarily need right now, you don't care about. Maybe if in an emergency, okay, that's fine. But that's not the money you're playing around with doing your, buying your groceries or making car payments or something like that, Oh, and also, by the way, I do my Roth IRA with Webull. I do my traditional IRA with Fidelity. And then I have my just standard brokerage account with Robinhood. Depending on where you're listening, definitely in the description of the YouTube, there will be links to, two of those at least. And you have the opportunity to get some free stocks. But I think that's really all I had in terms of information. I'm almost at 40 minutes, but I think I did do some pauses. So it's going to be at a lower time than that, just because I'm going to do some editing and edit out some of the lulls in the action. But let's just do a little. I mean, we don't have any viewer questions, so normally I would go to the viewer questions and answer some of those. But let's just talk about, I did taxes and I moved from California to Michigan, and doing the taxes like in for two different states is kind of whack a little bit, like specifically with the Michigan taxes. Now, I use Cash App Taxes to do mine. So I did my federal return through Cash App Taxes, and that was all fine and dandy because they're completely free, even if you have like what I had, like real estate, dividends, interest, like all these different things. It's all free, literally, on Cash App Taxes, which rebranded from Credit Karma Taxes, which is what it was last year, but they got bought out. Anyways, I couldn't do any of my state tax returns on there just because if you're a partial year resident, they don't allow you to do it. So that's fine. Like, I just needed to find, another website which I could do my state returns. I literally did all the calculations. Like, I had everything ready. Like, I knew exactly what I made in Michigan. I knew exactly what I made in California. I had the numbers. I did it all. And surprisingly enough, the California one was super easy, like super simple. They just basically asked for what you would think, like what is the income you made? Some specific questions here and there. And it was the government website. But for Michigan, I was trying to like some of these websites, like they don't have, it's not a Michigan website. They just had a list of all the places you could do it for free. And it was just like, I ended up doing like 1040 now. I don't even know what the website was. But then my tax return got rejected on there. So like I put all the information on there. And it gets rejected. Okay. I'm like, oh, did I do something wrong? End up, no, I didn't do anything wrong. It's really just the system doesn't check itself. So it's just like literally like a syntax error, basically. It's something I needed to just correct in terms of entering information. And so I sent it in again. And, 2 days later, it gets rejected again. And I get it back. And it's like, okay. It's just more of the same thing. It's like, oh, man, like I feel so bad because like also the deadline is coming up. So I'm like, am I going to be able to get this in on time? Like this is kind of whack. But anyways, all is good at this point in time because it got accepted. A lot harder than it needed to be, I think. Literally, if I could have just did something similar to Cash App taxes, it's so much simpler and the interface is just better on there. But anyways, that's just kind of a rant. Next year I'll just be doing full on Michigan, so we'll be back to the basics and using Cash App taxes, I think, probably, maybe. Not a sponsor? Want to be a sponsor, Cash App? I mean, Square's the parent company. Hello? Knock knock. Anyways, I hope you enjoyed the episode and maybe got a little something out of it. Maybe if you didn't get a little something out of it, maybe you got just some perspective on things, ways to optimize your finances, I guess, and maybe a little entertainment value as well. So be sure to subscribe, wherever you're listening to this, and especially on YouTube. Follow on Instagram. Check out the website if you're interested in financial coaching. Share the video with someone who maybe is getting started with investing. And of course, leave your comments for next episode. What do you want to see? Also, if you have any questions, it could be literally any general questions. I'm sure I'll have time at the end of each episode to answer a couple of questions there. And so, with that being said, I hope you have a FinOptimal day. Hey, is that going to catch on? Yeah, I hope so, huh? Congrats on being on the road to financial freedom. Hey, snaps in the comments. I hope you have a great day, and hopefully I will see you next time. So peace out, my friends.